This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial markets. And today, I'm down 2R, down 3R on the week. So, after literally having my best week of trading ever, I'm getting smacked, I'm getting humbled, which is to be expected. Because at the end of the last week, I felt like, wow, I finally got things going. This shit's finally starting to click together. Like, I may actually be profitable. And as soon as I feel that, boom, like that, I get smacked, I get humbled on cue. If I go back in my journal, I will literally find my entry where I wrote down, I feel like I've got it right now, which means I'm about to get humbled, which means new problems are going to be revealed to me that I need to solve in order for me to get to the next level. Every time that you think you've got it, you get smacked, you get humbled. That's how it works. Because you never get there. You never make it. You only reach a new level of understanding that comes with new problems. So this month, I have a model that I'm following. And the problem this month is that I am consistently missing moves and mistiming moves. So I had to figure out why that is. So I went back and I discovered a problem of why I'm consistently missing these moves. Because you can see I have a lot of great days on the calendar. And a lot of these trading days showed me my model, showed me my setup. I was just not able to execute on it. That's a problem. That has to be solved. But this comes after I reached a new level of understanding of finally piecing together a model and just following that. So, you never make it. You only reach a new level of understanding, which comes with a new set of problems, new fires to put out. But you never make it. That's the thing. But that's the beauty in it. Because if there was no problems to solve, there would be no work to be done, and you wouldn't do anything. The problems is what gives you the work. The work is what gives you the fulfillment. It gives you fulfillment because as you're working on solving these problems, you're getting better yourself and you're evolving. And there's fulfillment in that. So I'm down 3R this week, but it's nothing that I can't come back from. You see, today I took 2 losing trades. I'm only down 24 points. Yesterday I took 1 losing trade. I'm only down under 20 points. If you look at my winning days, 51 handles, 67 handles. It's nothing that I can't come back from. So I'm not allowing this losing streak to put me in a low frequency state of mind. Another discovery that I've discovered personally. You consistently or you perpetually oscillate between a low frequency state of mind and a high frequency state of mind because we're humans. That's what happens. But if you're aware, when you swing into the low frequency state of mind, when you're stressed, when you feel doubt, when you feel depression, when you feel anxiety, when you're sulking, you're just down. You know what it feels like. There's a reason, or there's a catalyst that puts you into that low frequency state of mind. For me, a big catalyst that puts me in that low frequency state of mind is bad trading results and bad trading performance. But today, I was aware of that. I take 2 losing trades, and I don't let it put me in a low frequency state of mind because I'm aware that that is the main catalyst for putting me in a low frequency state of mind. And because I'm aware of that, it can't put me in a low frequency state of mind. So I stay in a high frequency state of mind and I continue to learn, I continue to grow from the mistakes that I made today. And I learned a lot today. So that's how you have to frame your perspective around these losing days. You can't let bad performances get to you because the growth is going to come from the bad trading days. That's where your best lessons are going to come from. And today, I did something that I normally don't do. And so a great lesson came from that. It just reminded me of why I have these rules and processes in place to avoid this result right here. So this was an extremely long monologue. It's already been 4 minutes, but let's get into it. So today's Thursday, July 24th, 2025. Pre-market game plan. What is my bias? Today my bias is bullish because I like how this is setting up for continuation on Thursday. It's clear to me Tuesday made the Judas swing on the weekly range. Wednesday cleared out the remaining sell side, and now Thursday there's an overnight range that does not take Monday high and is slowly declining, rebalancing Wednesday's range. What is my draw on liquidity? My draw is Monday daily high. Let's set up what I'm looking for and why. Bullish discount gap opening because the price has formed this overnight range and slowly declined, leaving prime buy side above. New day opening gap, previous day settlement, smooth liquidity makes one area a stronger draw. Chart breakdown. Nope, not that right now. Chart breakdown, 3, 2, 1, go. Weekly candle, bullish. Why is it bullish? Daily chart. Okay. Monday trades up, takes previous weekly high. Tuesday trades down, takes Monday low. But what does it do here? There's a gap and it closed above it. That's bullish. Wednesday open, traded down, deep discount of Tuesday's range, doesn't have to take its low. Trade up, closed near its high. Very bullish. Overlap the down candle. So, the development of the weekly range, we clearly see that Tuesday has made the low of the week. The rest of the weekly candle is likely to paint up. Confirmed by Wednesday's close. The overlap of the down candle after it makes this signature right here. Everything's bullish. So that's the daily. 4 hour. I really liked how the market did not take Monday's high. Because what is that doing? That's the engineering of liquidity. In my eyes, in my book, it's how I read the market. Did not take it. Boom. What does that make it? Relatively equal. Now we have resistance, right? It's going to engineer buy-side liquidity in the form of buy stops for the people who are short as the market trades up to this price but moves away from it. So, going into the open, I see this large gap and I'm thinking, I'm going to buy it. Why? Because it did this, but it didn't take it, and then it slowly declined. Starts rebalancing Wednesday's range. So on the lower time frame, you can see the details. Tuesday, making the low of week, large up candle back inside the range. Equal lows down here. Wednesday drops lower first, clears out the sell side. This candle goes below that candle's low, trades up, overlaps the down range, and then boom, large up candle closed near its high, created the gap. So everything in here is bullish. There's no reason for the market to want to go down here. It's already done the damage here. It's already done the damage here. And it's respecting that gap on the daily time frame. No reason for market to go back down there. Damage is done. Clearly see by how the candles close, should not go back down there. Hourly. So, I'm not convinced that this is a solid high. Why? Because it's relatively equal. This high did not punch above that high and do the damage. What did it do? Traded up near it, but then faded away from it. I'm not confident in that being an actual high, and the market should turn away from that. Look what we did on Tuesday too. We left all this in here smooth. Wednesday drops lower first because if the market's bullish, we want to see it drop down first, then buy it at discounted prices, where it makes sense to be a buyer. Drops down, clears these lows, comes back inside the range, targets these highs, does not take that high, which we see in the overnight session here. Makes it relatively equal. Drops lower. I like the slow decline, right? So the market's holding these prices. We don't see a boom. We don't see large down candles, nothing. It's holding these prices. It's comfortable in this gap. Never inverse the gap, right? Primed buy side. This is what I use to frame my pre-market trade. My pre-market trade. Pre-market. I have a rule that says I cannot trade pre-market. But because I thought it set up so well and I was so confident in the draw on liquidity, which did deliver, I took a trade pre-market. I thought it made sense. I thought it did not make any sense to see the market go any lower than what it already had done. So I bought it. I violated my pre-market rule. And that led to me mistiming this move. That led to a really bad session. A really bad session where there's a lot of lessons for me to go in and extract, find out the problem where I went wrong, grow from it, self-evolution, 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 constantly, every fucking day. Every day. This is how you live life. This is how you do this shit. It's growth. It's personal growth. It's self-development. Become addicted to it. Become addicted to becoming a better version of yourself. It's fun. It's really fucking fun. And that's what I do every day. 15-minute. Prime that high, right? Slow decline in the overnight session. So I'm thinking the market is rebalancing Wednesday's range. Now here's where I frame my first loss, right? Pre-market session, this candle opens, trades down. It's underneath that low and that low, closed back inside the range. That's bullish. I really like that. I really like this solid up close candle on the 15-minute time frame. 5-minute. So hopefully you have a good understanding of why I was bullish on the day. Clearly looking for Monday daily high. Here's one thing that I did not mention yet. What do we have in this area of price? If we just highlight this, how many reasons are there for the market to want to trade in that direction? Previous day settlement, new day opening gap that it wasn't really used much, right? Just traded up into it once and then rolled away from it. And daily liquidity, all in one area. What does that make that? Strong probability draw on liquidity. So I have high conviction in the market trading to Monday daily high. 3 factors in this one area. N-Dog is influential because it was only used one time. When the gaps are only used about one time, they're still hot, high probability the market's going to draw back to them. This candle, up close candle, close back inside the range. I thought that made sense for me to be a buyer. And then this 5-minute candle also confirms reversal. What does it do down here? Inversion, fair value gap. So I buy the inversion fair value gap and I'm targeting Monday daily high. My stop loss was at the midpoint of this candle, and that is why I got stopped out prematurely. So from today, I noted that if my stop loss was placed efficiently, it probably would have saved me a lot of headache. But because it was under 10 handles, look what the market did. It punched out my order before I got filled. Let's see. Oh, I reset the count. I don't know the executions. Okay. Let's go to TradeZella. Take a look at the first loss. I didn't upload the screenshots. That's not good. Because I made them. They're not here. Okay. Apologies for that. We'll just take a look at this chart right here. Slight delay. Here we go. 1 minute chart. This is the first execution, or the second. Let's go to the first. No volume. 1 minute. Boom. Okay. So on the 1 minute time frame, we have that 5-minute inversion fair value gap right here. So I buy that on a limit order, and I'm targeting Monday daily high that was not taken in the overnight session, which was a strong reason as to why I was bullish in this session. My stop loss went, this was a down candle on my trading view. So I view this as a bullish order block. My stop loss goes below the mean threshold of that. You can see where I got stopped out. This arrow indicates where my order got filled, literally at the low of that candle. So was my stop loss efficiently placed on this trade? It was not. So I note that, right? Stop loss not efficiently placed at OBMT. Had I risked over 10 handles, there was room for at least 37 handles. Should have been at order block low under 10 or over 10 handles. So had my stop actually had room for the market to move and breathe a bit, then I could have targeted these highs, right? So my entry was at the 5-minute inversion fair value gap. My stop was literally right there. And I could have targeted this. Boom. 3R. That's 3R right there. Wait. If this is what happened, it would have been 2.65R. But another thing about this trade was my target is way too far. So even if the risk was properly framed on the trade, my limit order was up here, and the market would have never delivered that, and it would have came back on me. So I get stopped out of this move, and this is what leads to the second trade. This influences me to chase the market at the open, and this was not good. This was not good, guys. I could barely get stopped out of that, and I know that this is probably going to deliver from here. This up candle comes in right here, overlaps these down candles. I'm thinking re-enter, re-enter. But what I don't want to do is take 2 losing trades before the market even opens at 9:30. Those are my worst sessions, my absolute worst sessions, where I'm 2 and out before the market even opened at 9:30, because I shouldn't be trading pre-market at all, right? So the idea that I had in mind was this. Again, this would not have delivered because the market didn't deliver Monday daily high until PM session. But this was the idea. And I saw that the market started to leave the pre-market range with strength. So I missed the setup, and I'm like, damn. Market opens at 9:30. First thing it does, large up close candle, and I chase it on a buy limit order at this down candle with the stop loss on the wick. And I'm doing something like this because I thought that what the market had done pre-market was sufficient. I didn't think there was any reason for it to come back down here. So when the market lays this up candle as the first 1 minute candle, I thought it was just going to run right for Monday daily high. So I set a limit order at that down candle, hopefully gets an immediate rebalance, and then boom, drives for that. And then I got fucked. Like literally, I just got fucked. Another thing is that in my model, when there's a pre-market range and I'm bullish on the day, The only way that I can buy the market at 9:30 is if price had delivered a sell side objective or a discount objective pre-market. It didn't do that here. It took the overnight session low, the London session low. That's not what I really consider a discount objective. By discount objective, I mean it's delivering like previous daily low or some higher time frame and efficiency, probably greater than the 50-minute time frame, probably a daily gap, you know? That is solid discount objective delivered pre-market, and that would make sense for me to want to buy it at the open if the market gets up and leaves like that. Here it just took the overnight session low. Another thing is in my model, it's framed around how price trades around the pre-market range. So if I'm bullish and it leaves the pre-market range first and trades in favor of the draw on liquidity, then I have to wait for a drop down and take the pre-market range low second and then look to buy it. Today I ignored that because I thought it would run right at 9:30, influenced by the setup that I framed and missed pre-market. I thought it was just going to go straight for it, which is the same thing that happened yesterday. Yesterday I was influenced to chase the market short because there was a sell idea that I framed, did not take it. And so what did I do? I ended up chasing the market short out of frustration. Today, very similar situation. The market leaves right at 9:30. I thought it's just going to go run right for my draw on liquidity because I framed the risk here after barely getting stopped out, and then it just left. So I thought that was probably going to deliver, maybe chase the market long at the open, and I got stopped out really fast. So tough trading today, right? Definitely a rough session. And so that made me hungry. That made me hungry to figure out, what am I doing wrong? So I wasted no time. I worked literally 5 hours straight. I didn't take a break after the session was over. I just was like, there's something wrong, there's a problem, and I have to figure out exactly what that is, because I can't just keep trading without identifying and addressing the problems that I clearly have. Like, clearly there's something wrong. Clearly there's a reason why I'm consistently missing the moves and consistently mistiming the moves, because the market still delivered my setup. I had the draw on liquidity correct. The move just came after 10 o'clock, and this was such an obvious buy. This was so obvious. Look at this large open obvious gap. That's so fucking obvious. I just hurt myself. In the first 2 minutes of market open, I was done. Because I stopped out pre-market, I stopped out here. I have a 2-trade max losing rule, and then I have to walk away. I was done in the first 2 minutes of market open. I didn't even give myself a chance to trade this session because of what I was doing pre-market, which is why I have that rule. Didn't abide by that rule. This is the result. It all starts with breaking your rules. Then I had to ask myself, why am I lacking consistency? Why am I consistently missing these moves? So I had to do some problem identification. I created a new folder and I was like, problem analysis. I'm going to figure out my fucking problems because I'm tired of repeating the same mistakes over and over and over again. And I can't continue to repeat the same mistakes over and over and over again and just acting like everything's fine. I can't do that. I have to actually put in work, solve that problem, figure out what it is. So what is the main problem? I figured out that the main source is draw on liquidity. Conviction and draw on liquidity is the difference between a solid day where I catch the move and a bad day where I miss it. I've learned this lesson before. So already I literally built an entire system where I studied it, and I have actionable steps I'm going to take to try to solve this problem. And I did like a whole case study on all the trade examples that I've collected. I reviewed every single day this month, and I came to the conclusion that bias is not draw on liquidity. This could be a completely different topic for another video. One thing that I want to ask is, because with this YouTube channel, I feel like all I do is talk about myself and my problems. I'm not really serving the purpose or fulfilling the intentions that I had with this channel, which was to basically give and help. And all I do is talk about myself. So if you made it to this end of this video and you're still watching, I appreciate you for supporting, number one. But number two, I had to ask, what is it that I can do to help you as a subscriber of this channel, as a member of the community? Because I feel like I sit here and all I do is talk about myself, and I don't think I'm really helping my audience too much. So if there is something that I can break down or something that I can show you guys in a video that you think that would really help you, then please let me know what that is. And also, I appreciate the people who are actually consistently tuning into my videos, supporting me, commenting in the comment section. That is what keeps me making these videos. Seriously, like, you guys hold me accountable, because sometimes I don't feel like making a fucking video, but I know that there's people who are actually looking forward to watching my video as soon as I drop it. Like, there's people that are actually doing that, which is just shocking. Like, wow, like, people actually want to watch my fucking content. It's kind of mind-boggling, but it's cool at the same time, because I'm starting to build an audience. Some of you guys that know that, like, y'all see something in me, and I know it by the way you comment. And that's just awesome. That's an awesome feeling. Like, I have a handful of you guys that can see it, that can see it in me. And I think that's inspiring to you guys, which is the intention for this channel. But I feel like I could be doing more to serve my audience and the people who actually tune into my videos and support me. So if there is anything that I can do, please let me know. And that's going to be it for this one. We're at 20 minutes. So I'll be back tomorrow with another trade review.